Hey friends, Kevin Goehring here, your Sacramento, Stockton area realtor and lender, here with this week's weekly real estate report. The message for this week is don't panic. Hey, if you haven't heard the news, a lot has happened in the financial markets over the last, let's say, 24 hours. Number one, the Fed raised their rate by 0.75%. That is the largest rate hike since 1994. That was 28 years ago. Well, that is causing a ripple effect, and that is causing home mortgage prices to continue their march up. We are now at 5.78%. That is the highest rate since 2008. That was 14 years ago, and the largest overnight, or actually largest 1 week increase from one rate to the next in home mortgages since 1987, 35 years ago. So rates are definitely going up everywhere. The Fed raising their rate is going to cause the prime rate to go up, which is going to cause your credit card interest to go up, car loans to go up, home equity line of credit go up. But if you have been one of my clients, then I know for a fact you have a 30-year fixed rate loan, if I had anything to say about it and I did the loan. So you have no need to panic. You are fine. Your rate is set and you know what your payment's going to be for quite some time. Now let's go to the chart and see if we have something to panic about over there. So, hey, looking at chart number one, we can see that the number of available homes continues to climb. And that's kind of a seasonal normal, which is a good thing. But we are seeing pending sales just drop off, which is a little surprising considering how many people have been waiting to get a home. But it's not surprising considering how many people have been priced out of the market and how many buyers are now saying, you know what, we need to take a step back and wait. Because so many buyers were buying at the absolute maximum they could afford back when rates were in the 3s and very high 2s. But with rates going up, they've lost their buying power, and now they are forced to take a step back and wait for home prices to fall, which, looking up here, they have not done yet. We are slowly, very slowly, and this is the median sales price, it is very slowly working our way down, as well as the median list price slowly starting to work its way down. But it hasn't come down enough to really have an effect on people out there wanting to buy. It's just the deals are getting better. No, the houses are coming down slowly in price. How much are they coming down? Let's take a look at chart number two, because this is going to be kind of interesting. This gold line represents price reductions per week. And we have been watching it go up, up. Well, I ran out of chart up here. We got to keep going, keep going, keep going. And I am at the top of this chart. We have to reformat it just to cover the number of price reductions per week in our area. Right now, we're at over 1,800. What are we? 1,892. That is like 43% of the homes that are listed. Now, of course, it doesn't work out quite that way because each week we have a huge number of price reductions. Some of those price reductions work. Those homes are going into contract. But close enough, right? That is a large number of reductions. So the takeaway from that is if your house is listed, now is not the time to try and beat your neighbor as far as how much you got for your house. Now is the time to be smart, list for a number that makes sense to buyers, because as I've said many times, when the market changes and it starts its plummet downwards, as it did back in, the last market crash we had, you couldn't get under that number fast enough. If you were above the falling price reductions and you stayed high, you were in trouble. And you would just follow the market down. So price reductions, get it down there where it makes sense, and you will get your home sold. So, wow, we covered rates first and then the chart. So really, it's a quick one this week. Again, don't panic. It's going to be okay. Hope you guys have a great weekend, and I'll see you here next week. Take care. Bye.